Hi, greetings. This is Mr. Chauke. For this session, we're focusing on how to do the trade and other payables note as well as the statement of the statement of financial position. You probably know it as balance sheet. Now I'm going to try and do it quickly so that this lesson doesn't become too long. Now here they're saying that you're provided with information relating to A stores and the financial year is ending on 30 June 2022. The business is owned by Ace Ngozi. Now you are required to do the trade and other payables note as well as the statement of financial position. Now by this time you should be able to at least know some of the notes and also know how to work out these notes in brackets should they not be required. Okay, now I always teach my learners to say when you start with a balance sheet, just browse through the transactions and check what you are given, and when you are done with that, then transfer your information to where it's supposed to be. Okay, so now here they're telling us that they've given us the trial balance and we have the capital balance. We need to be able to check if this capital balance is at the beginning or at the end. But I normally tell my learners to say, start by entering this information in its appropriate place. Okay, so we're going to start by doing that. Now, by now, like I said, we are familiar with all the notes to the balance sheet and we know what is supposed to be included. We also know how the structure is like. Now, here you are given your non-current assets. We need to know that under our non-current assets, what do we have? The first thing that we have is what we call the fixed assets. And then from there, we're going to have our financial assets, which can include your fixed deposit. Okay, now we're going to include all these things that we're supposed to include here. Under current assets, remember, we're going to have inventories. We're going to also have trade and other receivables. So I'll just write trade receivables because we won't have space. Okay, and then here I'll write cash and cash equivalents. Remember, as a learner, you don't have a license to use abbreviations. And then we'll then have our total assets, and then under equity, remember, we're going to just do our calculations here and put the total here. And then under non-current assets, we'll normally have a mortgage loan, and then under current liabilities would have our trade payables. So we're going to have trade payables here, and remember, we are also going to have our current portion on loan here. We're also going to have current portion. Okay, and then we also need to check if we do have any bank overdraft. If it's available, we'll have to show it on the face of the balance sheet here. So that's what we need to check when we go through our questions. Okay, now we are starting here to check what we have. We have capital, which is 525,000, and we are not required to do the capital note, but we know that it is going to be part of our equity. So we'll start by that 525,000, and then we then proceed with the information that we have. Under this, we also have the drawings. Remember, drawings are supposed to be reduced from the capital account, so meaning that we are going to subtract here. We're going to subtract that 32,000, and then we'll then proceed with the next question. Next, we are told that fixed assets at carrying value, it's a question mark, which means we need to look for it. Fixed deposit, we also need to look for additional information, and then also the loan, we need to get some information from the adjustments. For now, we know that we have the trading stock, and trading stock as part of our inventories, which is 99,500 here. So we're going to include it here under inventories, 99,500. And then we are going to also check what else are we given. Everything that we have captured, we tick. We then also have data's control, which is supposed to be part of our trade and other receivables. So that 68,000 will come here. And then we can proceed with the next one. Next, we have creditors control. We know that our creditors control is part of our trade and other payables, so we're going to include it there. That 23,000, we're going to include it in trade payables, so we're going to write that 23,000 at the bottom here. Okay, and then we are also going to proceed. Then we have bank overdraft. Remember, I said bank overdraft must be shown on the face of the balance sheet. So bank overdraft is 30,000. So we're going to show it here, bank overdraft, and then we write that 30,000. Bank overdraft. Then we'd write 30,000. And then we are also going to check if there's anything else that we have on our trial balance. We also have petty cash. Remember, petty cash is part of your your cash and cash equivalent. So we're going to include that 5,000 under petty cash here. So we'd write 5,000 here, and then from there we are going to proceed and check if we have any cash float. We have cash float here 1,500, so which means we are also going to include here that 1,500 here, so plus 1,500. So now knowing your notes by heart in this case becomes very important, because you will not be able to do this without knowing notes. And we also have consumable stores on hand. Remember, consumable stores on hand as part of our trading stock, so that 550 will become part of our inventories here, plus 550. And then we are also going to check what else do we have. Now we have accrued expenses. Remember, accrued expenses are the expenses that we were supposed to pay, but we have not yet paid them. So it means that we are owing those people 3,200. So it's going to be part of our trade and other payables. So we're going to say plus 3,200 here. Okay, and then from there we proceed to check what else do we have. We have income received in advance. Remember, income received in advance is a liability, so it's supposed to be part of our trade and other payables. So we are also going to say plus 10,000. So you can see that by knowing structure, I can be able to earn some marks just by entering things in their appropriate place without having gone to the adjustments. And then remember, our trade and other payables is 10,000, and then our prepaid expenses is 6,800. So we can include that 6,800 in our trade receivables. So it's going to be plus 6,800 here. Now we are done entering the information that is available from the trial balance. It means that for every item that I've entered here, I've already earned some marks without going to the adjustments. So we'll go to our adjustments and get some information. Here they're saying net profit for the year of 172,000 has not been taken into account, so meaning that it was not added into our equity account. So what we are going to do, we are going to increase our equity account by 172,000. So we're going to say plus 172,000, and then you are done with recording that first transaction. From there, we then proceed to other transaction to hear what they're saying to us. Here they're saying a credit balance of 5,500 in the debtors ledger. Remember, a debtors ledger is like this, and then this is the debtors ledger that we are talking about. The balance is this side, 5,500. Now remember, it increases this side on the debit side, and then it decreases this side on the credit side. And the reason why a person can be both a debtor and a creditor is that someone can be rendering us a service while also being a customer. Okay, remember the debtors ledger increases, or debtors control increases on the debit side and decreases on the credit side. So this one will do the opposite. It will reduce this side. So remember, this is the debit side. So now they're saying that a credit balance of 5,500 in the debtors ledger, this balance is this side on the minus side. They're saying it must be transferred to the creditors ledger. We are moving this from this account to this account. How are we going to move it? We are going to bring it this side, so it's going to be 5,500. Okay, which means it will cancel. But check the sign. The sign says it's debited, so meaning that we are going to debit debtors ledger. And then because we are transferring it to this side, we have debited debtors ledger by 5,500. So it means we must then credit creditors ledger by 5,500. So that 5,500 will come this side, and then our creditors ledger will be debited by debtors ledger. So it means one account debited, one account credited. So accounting principle has been fulfilled, the double entry principle. So it's a plus 5,500 in the debtors control and a plus 5,500 in the trade payables. So we're going to add 5,500 both sides. So I'm going to say the side plus 5,500, and this is a common question. So also this side I'm going to say plus 5,500. Okay, and it will give me 4 marks because they know most learners struggle with this. And then the next one, they are saying that the financial assets of 23,250 at applied bank consist of the following. So now they are telling us that our financial assets, our total financial assets is 23,250. That's the first thing that we have to record. So our financial assets is 23,250. What is happening to those assets? The adjustments will tell us. So now they're saying a fixed deposit of 8,000 will mature on 31 August 2022. Now remember, our year is ending on June. Okay, it's ending on June. We are on June, and then this will mature on the 31st of August. So which means it will be July, August. It will mature 2 months after we have closed our books. So which means that this is supposed to be transferred to our current assets because it will be maturing within a period, or it can be converted into cash within a period that is less than 12 months. So we're going to subtract it from the long-term financial assets to short-term financial assets. So it's going to be a minus here on the fixed assets. Here it's going to be a minus 8,000 here. Remember, we are moving it from the long-term fixed deposit to a short-term fixed deposit, so it will be a minus 8,000 there, a plus 8,000 here. And this similar transaction was available from what was written last year, so please get used to such transactions. And then the next one, they're saying that goods to the value of 1,500 was donated to a local orphanage, and they're saying the entry was reflected correctly in the income statement, meaning that it was recorded as donations in the income statement, but they're saying no other entries were made. So meaning that the movement of those goods was only reflected on the income statement, but actually in our trading stock it doesn't show that that trading stock was taken out. So we must reduce our trading, the value of our inventories, by 1,500. So we're going to come to our, remember when we do donations, we say debit donations and then credit trading inventory or trading stock. Okay, so we're supposed to also subtract that 1,000, is it 1,400? We're supposed to also subtract that 1,500 in our inventories. So we're going to say minus 1,500. Now we are going to check what else is happening here so that we can know how to conclude our balance sheet. Here they're saying that the loan statement reflected from Gwede Bank was as follows, and they're saying the balance on the 1st of July was 350,000. The repayments that were made during the year was 18,000, which also includes interest. And then remember, your interest, if it is capitalized, it's going to increase your loan debt. So which means that we need to firstly look for the closing balance. So our closing balance will be 350,000 minus 18,000 plus 12,000. Okay, so we need to show that calculation also in the we need to show the calculation also in our balance sheet. So 350,000 and then minus 18,000 and then plus the interest of 12,000 is giving us, remember here it's supposed to be 350,000, not 35,000. So it's supposed to be 344,000. So the closing balance is supposed to be 344,000. So we need to show how we got this closing balance in the balance sheet so that we can be able to deduct the current portion, and then from there I think we'll be done with our adjustments. So let's show that part. Remember, it's 350,000 minus 18,000. So I'm going to show it in our long-term loan. 350,000 minus 18,000, and then we also need to check what else is happening. Remember, our repayment is 18,000, our interest is 12,000, so we need to say also plus the 12,000. Okay, and then it will give us the closing balance. So let's see, 350,000 minus 18,000 plus 12,000. It is giving us 344,000. This is our closing balance. We got it, but we need to check if there's any repayments that will be made in the next 12 months. Here they're saying that the repayments of capital portion of the loan will remain constant in the next financial year. Now, when you want to see what is your current portion, you just check the difference between your interest and your repayments. It will give you the current portion. So if we say 18,000 minus 12,000, it's going to give us the current portion on loan, which will be 6,000. So meaning that on our closing balance of the loan, we are going to subtract 6,000 because that 6,000 will be paid in that particular period. Now remember, that 6,000 comes here as a current portion on loan because we are going to pay it in the next 12 months, so it's payable. Okay, and then on the loan we also supposed to subtract it, so we'd say minus 6,000. So meaning that our loan will be 344,000 minus 6,000, which is giving us 338,000, and then this 338,000 is going to come here as our non-current liability. And then remember, we have dealt with all transactions, we've brought it also here. Now remember, we also need to get our equity. How much is our equity? We don't have anything else that will affect our, if you look at this, because of they're telling us that this will give us 45 marks, it means that the transactions are completed. You can see there's nothing, so we just need to close off this balance sheet. We are going to add where we are supposed to add and subtract where we are supposed to subtract. Let's start with the financial assets. We have 23,250 minus 8,000. It is giving us 15,250. Okay, so we got that figure, and then because we don't have other things, it means this one will be a balancing figure, so we'll need to come here, and then we go to our inventories. Our inventory, remember, it's going to be 99,500 plus 550, and then we subtract that 1,500 of donations, which will give us 98,550. Now we move on to our trade and other receivables. We've used all the information that was given to us. So now if you say 68,000 and then you say plus 6.8 and then you also say plus 5.5, it is going to give us 80,300. Okay, and then from there we go to our cash and cash equivalents. Our cash and cash equivalents is 5,000, and then plus 1.5, and then also plus the 8,000, and it is giving us 14,500. So meaning that for us to be able to get our current assets, we're going to say 14,500 plus 80,300, and then also plus 98,550, and then it will give us our total current assets of 193,300. Remember, it's 193,350. So we are done with the current assets, and you're going to get a lot of marks for these. Okay, so remember to do your totals. Even if one thing is wrong, just write what you have. Now remember, we have the total of our current assets. We don't have the total of our non-current assets, so we can't get total assets. We'll need to use the equity part to get what we want. Okay, so now we're going to go to our equity part. They're saying that we have to say 525,000 plus, we're going to say 525,000 plus 172,000, and we're going to subtract 32,000. It is giving us 665,000. So we're going to have our 665,000 here. Okay, now let's check, let's verify if what we've done was correct. 525,000 plus 172,000, and then also subtract 32,000 of the drawings. Okay, our answer is fine. Now we proceed to get our trade and other. Again, remember, in terms of bank overdraft, nothing changed. We know that it still remains our 30,000. So meaning that we just need to get the total of our trade and other payables. So if we say 23,000 plus 3,200, and then plus 10,000, and then plus 5,500 is going to tell us how much we are going to have, which is 41,700. So we're going to write that 41,700 here, and then from there you verify your information. 23,000 plus 3.2, and then also plus 10,000, and then also plus 5.5. It is still giving us 41,700. So meaning that our calculation are up to par. So what we can do now is to add our total liabilities. So if we say I'll bring this on the side so that you can see how I'm calculating. If we say 41,700, and then we say plus 6,000, and then we also say plus 30,000, it will give us 77,700. Okay, 77,700 as the total of these. Now from there, what we need to do, we just need to add our equity plus liabilities. Remember, the accounting equation says assets equals to owner's equity plus liabilities. So in this case, our owner's equity is 665,000. Our non-current liabilities is 338,000, and then our current liabilities is 77,700. So meaning that our total equity and liabilities will be 1,080,700. Okay, 1,080,700. Now this 1,080,700, I'm going to bring it here because the rule says that our assets should be equals to owner's equity plus liabilities, and then from there I'm going to take this total assets that I have, and then I subtract my current assets. I'm going to subtract 193,350, and it's going to tell me how much are my non-current assets, which is 887,350. Okay, so it has given us 887,350, and then from this I'm going to minus my financial assets. So I'm going to say minus 15,250, which gave me 872,100. So this, guys, is how you can easily complete a balance sheet. As long as you know your information, you're not going to have any problem. Just remember that before you can master the balance sheet, you need to master your income statement and your notes. If you need help with any of this or related to this, you can leave your questions on the comment section. Thank you so much for watching. Please share this lesson with others and subscribe to this channel. Thank you.